The live trading price for Plug Power Inc. NASDAQ plug is currently sitting around $2.01, reflecting a recent significant run-up. But the real story lies not in that price movement, but in the institutional maneuvering beneath the surface that suggests a complex, high-stakes battle for the company's direction is being waged right now. The expectation for a stock that has fallen over 90% from its recent highs is that it is viewed as a distressed asset, a falling knife, or perhaps a deep value play poised for a turnaround. And general market chatter often focuses on the perpetual unprofitability and massive cash burn that have plagued the company. However, the unexpected twist is that despite these very real financial challenges, Plug Power just successfully completed a $375 million convertible notes offering, securing cash, which management immediately used to eliminate higher-cost debt. A move that provides crucial, if temporary, breathing room and directly challenges the narrative of imminent collapse that many bears have been pushing. This is a critical development that speaks to the company's ability to still access large pools of capital, a necessary component for any business operating in a capital-intensive infrastructure build-out like green hydrogen. The core challenge for Plug Power remains the enormous investment required to transition from a fuel cell manufacturer for material handling, which is their historical revenue engine, to a fully integrated global green hydrogen producer. The recent stock price movement, characterized by extreme volatility, is a direct result of this tension, further complicated by two major recent updates. First, the company announced a pivot to monetize electricity rights, potentially yielding over $275 million from servicing AI data centers. Second, and more concerning, the company warned that activities related to the $1.66 billion DOE loan guarantee are temporarily suspended, risking termination of the commitment. The Q3 2025 earnings report, which saw a revenue miss against consensus estimates, still delivered a slight beat on the non-GAAP loss per share. The market fixated on the top line and persistent negative gross margins, reacting harshly. Yet immediately following that drop, we saw a fast rebound on the signal of improved operating cash burn, which was significantly lower than the prior quarter. This volatile price action tells you everything you need to know about the current investor base. It is split between fundamentalists focused on the GAAP P losses and growth investors betting on the successful execution of the long-term hydrogen infrastructure plan, including the 46% sequential growth in the electrolyzer segment. The market narrative, the expectation, is that Plug Power is burning cash too quickly to ever reach profitability. But the reality is that the firm is executing on crucial capital-intensive milestones like the deployment of large-scale electrolyzers. Now we must address the persistent and significant short-selling pressure that hovers over this stock. Plug Power is an archetypal high short interest name, with the latest available data showing short interest at over 305 million shares, representing a staggering 23.31% of the public float. This level is exceptionally high. The days to cover stands between 2.52 and 3.89 days. The short borrow rate remains relatively low, currently around 0.67%, indicating that while the conviction from short sellers is strong, the availability of shares to borrow is not yet constrained enough to trigger an expensive short squeeze scenario. For the retail investor, the actionable insight is not to simply chase the idea of a short squeeze based on the high percentage of float shorted. The capital structure risk is real, especially with the uncertainty around the DOE loan. Instead, responsible investors should use the short interest as a proxy for market skepticism. It frames the debate. The short sellers believe the company cannot raise capital without unacceptable dilution and will fail to execute, while the bulls believe the company will succeed in hitting their production targets, benefiting from the AI data center deal and government incentives. The next signals to watch in the coming weeks will be the final status of the DOE loan guarantee and the funding details of the AI data center partnership. What is your take on the rising short interest? Smart money or a concentrated bet on a macro headwind? Comment below how many shares of Plug Power you currently hold, or if you prefer to trade it via options, And what is your biggest concern about the hydrogen sector right now? This video is created for informational and entertainment purposes only. Please understand that I am not a financial advisor. Always conduct your own thorough research before making any investment decision.